Hi, my name is Dora Kalentog, and this is my partner, Ador Kalentog. We're a father and daughter team for Prudential California Realty in Daly City. We have helped our community for 36 years. The video you're about to watch is for educational and informational purposes, and the people that we've selected are professionals in their field and past clients. Thank you so much for having us in your home today.
How do you feel when you realize your property is upside down?
Well, I felt it was very stressful. I worked so hard to own a home, and finally I finally purchased a home. But after a few months after I purchased a home, my overtimes were cut down to minimum, if not all. So I wasn't making enough income, and I couldn't sleep. I tried to come up with some ideas on how to make some extra money. So overall, it didn't feel right to know that I'm losing my home.
John, why did you choose short sale?
Did not have the income to qualify for a loan modification, and it made the most sense from a credit perspective.
Thank you, Dora, for providing your professional real estate expertise. What homeowners truly want to know, how can they qualify for loan modification?
The first thing you must do is explore all of your options and start with a loan modification. To qualify for a loan modification, there are only three things: the desire to keep the home, experience a financial hardship, and proof of income.
What do I do if the loan modification is denied?
You have 6 other options, such as short sale, foreclosure.
What's the difference between a short sale and foreclosure?
In a short sale, we are able to negotiate with the lender for the shortage. In a foreclosure, the bank will likely come after you for the difference, and the foreclosure will stay on your record for 7 years. You don't want to have a foreclosure on your record.
Mr. Thompson, thank you for joining us today. Please tell us what you do and how long you've been doing it.
I'm a certified public accountant. I've been doing it longer than I want to think, really, but about 25 years I've been practicing public accounting.
Okay. Can you tell us a little bit about recourse and non-recourse loan?
Recourse means that the lender can go against the borrower personally for the loan if it's not repaid. Non-recourse means that you typically find if somebody has a residence and they've taken a loan to buy a residence, frequently those are non-recourse, which means the lender does not have recourse to the borrower. They can only go to the property to satisfy the loan.
Will the bank come after me for the balance?
The bank can usually come after the borrower for if there's a shortage, if the property is sold. That's a short sale, unless there's an agreement otherwise. However, that's a legal question, so anybody that's facing this situation should contact competent legal counsel. I'm not an attorney.
Okay. What happened on my tax return when I do a short sale?
Well, in a way, it's simple. You sold your property. If you have a sale like selling a property in a regular sale, you report the sales price and minus the cost of the sale. You could have a gain or a loss, and that could be taxable or not, depending on what you use the property for.
Attorney Morakwin, will filing bankruptcy help me keep my home?
Filing a bankruptcy may help you keep your home. It depends on the circumstances. For example, if you're behind on your payments for a home and you want to keep that home but you're not able to modify the loan yet, you can file a Chapter 13 bankruptcy, and what you'll do is you can put all of those payments that you're behind on into a payment plan that allows you to catch up on a basis of what you can afford to pay per month and stay in the home. So that's one way that you can stay in your home.
Explain what Chapter 7 and Chapter 13 is.
Okay. Chapter 7 and Chapter 13 are two distinctly different types of bankruptcies. A Chapter 7 are for people who really just want to wipe out their debts. They want to walk away and have a fresh start. Now here's the major difference. A Chapter 13, you have to pay a little bit back towards your debts, and that's a percentage of the total debt. It could be 5%, it could be 3%, it could be 20%. It all depends on what your income is.
After our successful short sale transaction together, how do you feel now?
Well, it's a relief. Three things. I don't have to worry about a mortgage that I cannot afford. Number two, I have a better relationship with my family and my kid. When I'm with them, I stay focused on them. I don't think about anything else. And number three, I got to save my credit.
How do you feel now after our successful transaction together?
Like a huge weight has been lifted off my shoulders. I really want to buy a house again as soon as possible. And this took care of a lot of phone calls from banks, a lot of insurance inquiries on back insurance I owed, and this took care of everything, and now I'm purely looking forward instead of back.
Thank you for watching this video. We hope this information will help you make the best decision for your future.